The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading, and today's going to be an interesting one, digesting quite the sell-off yesterday, the NASDAQ 100. Right now, we're up by about 0.1%, and look at the volatility we had overnight. Futures open at 6 o'clock. You actually trade lower, below the lows of yesterday afternoon, so you close out the session almost right where we are right now, right? Trading at about 19,450. You were down 300 points. That's a percentage and a half overnight. And it's 8 o'clock last night. So, is the slide going to continue? Then we catch a little bit of a bid this morning, and we've given up 120 points. There's volatility everywhere in this market. And yeah, S&Ps right now. Last night, I found myself saying 55.58. My goodness, that's quite a pullback. I haven't heard a 5,500 handle in the S&Ps in some time. We're back above that price level. S&Ps positive by 1 point at 56.22. Dow negative by 13 points, so almost flat right now in the Russell, leading the way in positive territory, up by 0.6% or 11 points in the positive. Boy, crypto, right? You talk about volatility. From 76,000 last night, it catches a bid this morning, up $2,000 to or 2.7% to 81,000. Crude was approaching a 64 handle. You come down to $65 and change last night. We're trading at 66.77. Crude slightly in the green this morning. Gold contract. Let's back this out. There we go. From 28.82 last night to 29.14. We're up by $15 on the session. We jump to the dollar index right now. There's a lot of dollar weakness right now, no matter where you look at. You jump over to the 10-year. And we're talking about a 10-year yield of about 4.24. So we've been chopping around at about 4.25 for some time. Taking a look at things on a daily, critical area. Now I got to update that one. As I just said, we're at 4.236 right now. Okay, 4.236. So round up 4.24. But as you see, to go below where we are in yield, you have to go above where we are in price right now, right? Higher price equals lower yield. And you know, I love fundamentals, but boy, do I love technicals, folks, because look at this area on the chart, critical area. That's where we traded lower on March 4th. This is a daily. You're bumping up against that area yet again. Right now, we're at 111.06 and the 10-year approaching 4.25%. And yeah, as I mentioned, though, there's your 10-year on a daily, and there's your dollar on a daily. Look at it. It's not stopping, man. Yesterday, a slight reprieve in the dollar as we hovered around 103.50. We're breaking below that level right now at 103.471. And yeah, 8 days ago, you were at 107.4. We're at 103.4. I don't think it's slowing down, man. You break below this level we're at right now, again, technicals. And this is where, folks, you know, I always say things like you don't have to be a genius in the market. Okay, it's an art, not a science. If you're looking for a dollar bounce, that's a great technical area. All right, even if you're bearish longer term, that's why I say we got a two-way market. Okay, we don't have a two-way market right now in the dollar, and catching a falling knife, I'm not buying this dollar right now. Okay, but what I do like about trades like this, all right, yeah, it was just one little pullback. Okay, but this is a critical area we're at right now, and if you break below there, you're talking about going right back to 100, man. That's where you're going. Nice round number. We made it to 100.157 in late September, and we're at 103.47, but dollar weakness in this market right now, market weakness across the board. And even with the dollar continuing, right, that slide, gold holding up relatively well. All you have gold doing is consolidating between 2,900 and 2,950. Okay, yeah, you got a couple highs higher, you got a couple lows lower, but put it on your charts. All right. And yeah, to some degree, right? As I said, an art, not a science. We got a consolidation going on. And at a time when you're getting quite a pullback in the dollar, I'll take a consolidation in gold right now. Showing remarkable strength. Gold up by $15, up another 0.5% at $29.14 this morning. All right, let's talk a little airlines. So Delta, with their numbers last night, look at this clawback, though. Ooh, up to $49 from $43 last night. You got Southwest. Yeah. Market liking that they're going to be taking in bag revenue. That seems to be the case. And American with a little volatility as well. All right. So U.S. Airlines slash guidance as economy and accident spook flyers. Hooks, I mean, the accidents seem anecdotal. Is anybody, and it's not a real question, because if you are, it's very difficult to believe that a few accidents is going to dramatically shift the flying outlook on airlines versus, right, a little bit of economic weakness or a little bit of volatility and uncertainty in everyone's pocketbook driving down. But you had American Airlines and Delta issuing warnings about the U.S. economy. Yeah, American on Tuesday doubled the loss expectation for the first quarter, and that was just after Delta slashed its profit guidance in the half. And then you also have, I did close that article. I'll pull it back up right as I was getting it ready. Yes, and there it was right there. That was the article. I was getting ready, closed it by accident as I was getting ready for the program. How is Southwest going to compete when they add bag fees? I was listening to Bloomberg earlier this morning, and Jonathan Farrow, I think he made a great point. And it was just like, hey, what does everybody hate about travel in general on a plane? It's the boarding process in general, right? The whole experience may be a little tough, but the boarding process, you're taking forever, the unboarding process, the unloading process, all that stuff. He said, don't start charging them for checked. Charge people for over bags, nonetheless, you take a look at this chart. So Southwest gets a little bit of a bid. Whoop. You go big picture on this equity. We're going to open right now at about $31 on Southwest, and you can see we talk about technical areas. Nice area, $35. Your double top from last year. You've traded lower. Pull back on volume last week for Southwest. Look at that. We trade lower on about 65 million shares. That's the most volume we've done since the pullback. I don't know. This equity's got quality volume to the downside, man. Look at this. We got a pullback. Look at that. A year ago, right? You pull back right to where we are right now. You catch a little bit of a bid, but we got volume at the lows, man. The volume acceleration in August, okay? And then this recent acceleration, this whole move back, right? Just zooming in on this volume on Southwest this morning. You take a look at Delta, the run up. You talk about a give back, man. Delta's going to open at $49. You just trade from 37 up to 69. You catch a bid on their earnings 3 months ago, and that was the sell. They gave you 4 or 5 weeks. And it's pretty remarkable. You're off by 30+% this morning for Delta. You jump over United. United's going to open at about $80. You're chopping around the other 382 on United. And American, quite the pullback as well. Look at the volume accelerating in these equities, right? It's doing the gold report this morning, put out a video for it yesterday. In some of the gold equities, really an acceleration of volume, and you see it right here. That is some volume to the downside, man. How about it? On a weekly basis, 318 million shares traded. As you accelerate, already this week, 83 million shares. All right, folks, markets right flat. We got an interesting day in the markets. We got a lot to talk about. Stay tuned. Coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets oscillating this morning. Going to be an interesting open, as I said, right? We got a two-way market, not outlandish. As we pulled into positive territory, I said, you know what? Maybe this is the bounce, right? Maybe this is the bounce. Going a little bit big picture here, okay? When markets really deteriorate, I'm not saying that you will, but on a larger time frame scale right now, yes, that's a pullback, okay? But you're talking about barely a 10% correction pullback when we've been averaging 20, 27, 29% returns compounded year over year from 6,600 to 22,000 over the course of, 1, 2, 3, 4, 5 years, right? So 300 and something percent profit over the period of 5 years. And even if you take where we came into 2020, okay, you're talking about 130, 140% gain, cherry picking the highs before the COVID sell-off. Okay, point being, we have some volatility in a larger picture from 10,000 to 20,000. But again, going back, okay, to March of 2022. Okay, that's a monthly. I'm going to put it on a weekly. This is the NASDAQ. And here is March. And the point being is that was the melt-off, right? The Fed, they really started to hike. What was so remarkable is that when they actually started with their first hike, the market somehow rallied on that in March, because their first hike was in March of 2022, okay? And you got a rally from 13,000 up to 15.2, okay? You go to the S&Ps, there was similar action here, There's 2022. We zoom in. There's March. S&Ps, you catch a bid from 4,100 up to 4,600. You rose more than 10% there. Think about it. There was an opportunity there with everything coming down the line, with where the economy, remember, everybody was up in arms about inflation already, right? Everybody was up in arms that the Fed was late to the party. Remember, that was the whole vibe going on in March. We didn't know that we were going to deal with inflation like we had it. They hadn't even begun to hike. Transitory was still something that they might have been talking about back then. The point being, you get rallies before you get a rip-roaring decline, okay? We're down 10, 11, 12% in the NASDAQ in a short period of time. You can expect some rallies, all right? But remember how markets, my dad used to say at 11, what's the market's job? Take the most amount of money from the most amount of people in the least amount of time, right? Take the most amount of money from the most amount of people in the least amount of time. And there's people taking that money, making that money in the market, okay? But it can be deviant, that word. And that bounce in March of 22, man, that was quite an opening in terms of a second reprieve. The market showed you what was possible when you traded from the highs of 4,800 down to a low of 4,300. Okay, what is that? That's about a 10, 11, 12% pullback. Interesting. It's exactly how we kicked off 2022. Okay, 10, 11, 12% pullback. Then you got a 10% pop. Now, different numbers because you're going 10% off 4,100 versus 10% off 4,800. And then what happened? You trade from 4,700 down to 3,502. Right? So get your spikes up in this market because I found myself thinking, you know what? This is reminiscent. If it pulls back lower, we need a little bounce. We're back to a nice area here, the highs that we had in 2024, right? Maybe you catch a little bit of a bid. Now, listening to Bloomberg earlier this morning as well. So only 345 equities were lower yesterday. Okay, advanced decliners, only 345. The last time that you got a move like that where you had the S&Ps down 2.5%, but advanced decliners, you only had 345 equities declining, dot-com bubble trading territory. Okay, indicative of, yeah, Mag 7 is now Bag 7, Jimmy. I mean, that's the type of statistic you get when the market is down that much and you only have 345 equities down. Well, what equities are down? The equities that were down were the equities that have been carrying this market higher, and that's the problem. Tesla's going to open about $2, a buck higher. You were all the way down to what, 210? Yeah, 210.52 last night from 488, 210. You talk about some animal spirits in this market as we were at highs. Now, Tesla's its own beast, okay? But some of these pullbacks yesterday, you know, Microsoft down from 450 to 380 in a heartbeat. Biggest company out there, Apple shares, ripping lower yesterday. We're going to be down by a couple dollars lower as well for Apple. Amazon, flat this morning, quite a pullback for Amazon. Report out from some analysts this morning. I heard the article on Bloomberg earlier talking about they're a little bit better positioned in this market if there is a recession than some of their peers. And I am a bull on Amazon longer term, but you trade at 194. You got markets slightly in the red. And let's talk a little bit of Apple. So I was reading this story last night about Apple, and they got a new operating system. They're going to start talking about it in June at the Worldwide Developer Conference, but it's a big deal, especially when it comes to the iPhone, where they haven't revamped things, I think, since 2013 was the number they put in here. And, you know, you talk about COVID, man. That a company like Apple can bring forward that type of revenue and still grow at 33% and then compound it at 8% the following year, and you only get a 3% decline, but things have stagnated. You're at a 5% growth number for 2025, okay? But yeah, it'll be the biggest revamp for the iPhone in 12 years in terms of the software. They're going to try and have a little bit of a more cohesive environment, whether you're talking about iPads, even talking about the Vision application that they go through there. But yeah, Apple trying to spice things up. I'm not sure that's going to be the solution to them selling more phones. That's what I found myself thinking last night, right? Now, it's probably due. The world is changing. Interfaces are changing. You think about how when they revamp the world, taking over from, you know, a digital touchscreen phone versus the Blackberries that were so dominant, right? People question that. Things change, and they're going to try and change with it. But keep your eyes on that one. Yeah, the whole engineering organization. I tell you, they got a problem on phones, though, in general. This number, so ironically, right, 220, 21, you know what's crazy is I either bought my iPhone in 20 or 21. Tommy was born in February of 21, and I got a new 12 Pro Max Plus, the best one. Like 256 gigs. Thank goodness the amount of phone batteries, pictures that I have on my phone now. And I talked about how I was interested in upgrading recently. My phone's still great. I'm not upgrading them right now. All right, maybe I'll upgrade it on the 19 that they're coming out with. But they have an issue, man. Because guess what? I'm going 5 or 6 years using a phone, and I use it for everything. Think about that, right? I take 10,000 pictures. I take videos all the time. I operate multiple businesses on the phone, and I can operate on an Apple iPhone for 5 or 6 years. That's a problem if that starts becoming the norm. Now, that's going to change potentially with AI. They're going to try and change it. But yeah, Apple continuing the declines. Look at that thing. Trading lower right now. Coming back for the opening bell, folks. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We got markets open. We got the NASDAQ 100 off by 18 points, or about 0.1%. And as I mentioned, right, extreme volatility overnight. You were as low as 19,139. You make it up to almost 19,600, right? You're talking about what, 450 points of action, more than a 2% acceleration higher, but that's from the move lower. And nonetheless, we kick things off almost flat from yesterday's close. S&P's off by 7 points, 56.14. Dow negative by 55, and the Russell slightly in the positive. Bitcoin catching a little bit of a bid. And yeah, how about everything yesterday? Whether it was Coinbase, they're up by 4.7%. They were getting clobbered yesterday. Robinhood, man, this thing. Those earnings they came out with recently, what an opportunity, right? They're crushing it. They're crushing it in crypto, though. High extreme volatility. And boom, this equity is almost cut in half from where it was trading at on 3 separate days. This was not some one trade peak high. All right. You traded 78 million shares on February 13th, 40 million shares, and 42 million shares the next 2 days on Robinhood. Huge numbers, man. You talk about it. All right. Let's check out how some of the airlines are opening on their tough forecast. Delta down about 5% right now. You jump over to United, barely in the positive. American down by 1.8%, and Southwest, they like that they're charging for bags. Southwest is up 11.2%. Yeah, you're going to have a lot of work to do to get through this bar from a year ago on Southwest. A lot of work to do. Now, we got nice volume. Okay, but look at this pullback we had last week on Southwest. You just zoom in. Last week's pullback, 65 million shares traded. And yeah, it looks like a nice bullish engulfing there. But Southwest has some work to do. They got some bigger work to do in terms of brand as well. All right, look at a little big picture. So the price of goods. This one's an interesting from Bloomberg. Okay, when's this out? Last night? No, this early this morning. First inflation, now tariffs. Low-income Americans can't catch a break. Now, this article was what we talked about in the last couple weeks, all right? This one was from Bloomberg, and it's talking about how much of this economy is driven by the top 10%, okay? Share of U.S. personal spending, if you weren't watching the program, I think this article was like February 28th. Where were we? February 28th, okay? How about that? And top 10% are half of the economy. You back that up to 96, okay? Even to where we were closer to 2005, quite a separation gap to now 10 out of every 100 Americans driving half of personal spending. And it makes sense. It's always been a big number, okay? But look where we were. There was a time in the early 90s where you had the top 10% only spending about 36%, and the 60 to 90% were above that. There's now a 20% gap between those two. And at one point, the top 10% in the economy was spending less than a 10% gap over the bottom 60%. That number now, a 30% gap. Right? Crazy how close those numbers were and the gap. Now, you combine that, this is all going to talk about where you are in this economy, okay? Because, boy, if you're servicing rich Americans, you're probably in a very good spot. But what this article talks about is, of course, you know, the people getting hit the hardest, and tariffs are a consumption tax, folks. And yes, I get it. It's to, you know, incentivize behaviors, etc. But consumers are going to bear the brunt of it. They're going to bear the brunt until everybody changes their methodologies. And that's the bummer of it, right? Who bears the burden and who bears the pain, and some of these companies will as well, to force the changes? It's consumers on the lower end because it's a consumption tax, okay? And there it is. Goods prices, month over month, look at these rises, man. These are compounded numbers. November, 0.3%. December, 0.5%. January, 0.4%. Yeah, changes in goods prices, okay? You talk about it. And when you're on the bottom end of things, guess what? From February 2020 to June 2024, the poorest fifth of U.S. households saw prices rise on their purchases by 2 percentage points more than the richest fifth of U.S. households. Goods are going up, period. And who's paying for that? The poorest of Americans, because they spend all of their money on goods. So that's a dicey trend when you talk about the economic power of so many Americans getting decimated, and just look to different areas of the market when you're talking about it. All the markets in the red, just like that. Even the Russell gives it up, man. Russell was up by what, 0.5%? Something like that when we were coming in. Russell just traded off 1% from where it was at 7:30 this morning. Remarkable volatility. Dow ripping lower, 41,700. S&P's off by 21. VIX off by 28. NASDAQ off by 28. We jump over to the VIX. We're spiking again, almost near the highs of yesterday, 29.56, 28.79. All right, speaking of retailers, Dick's out with their numbers. They claw it back. So only down by 1% right now. You do spike to 198. They have the conference call going on. They're liking what they're saying on the conference call, back to almost equal. Kohl's, different story. Yeah. You know, a while back, and I'm talking about, let's see if I put this. That's a weekly. Let's just go back for a daily right now. Yeah, after you traded, you know, it's tempting to think you can catch a falling knife, but this thing's going to zero, man. That's what it looks like. Doesn't mean it's going to happen. But look at this chart. You're breaking below the levels that we had in COVID. All right? Imagine that. Retail crashes were below where you were at the lows of COVID. You haven't traded at these prices in Kohl's since 1997. Yeah. Pretty amazing. I'd stay away from that one. You know, we go to and talking about the numbers in terms of what they're talking about. Disappointing outlook. Yeah. I don't know if they have a place in retail right now. Dick's, different story. Okay. Comp sales at Kohl's, yeah, going to drop 6% this year. I tell you, you know, listen to yourself too. I talk about this anecdotal as it may be, okay? There's a Kohl's in the mall near us. I don't go near that place. Don't go near it. All right? Love going to the Target, love going to different stores. I've talked about it. Kohl's has an expensive feeling with a discount feeling as well. It's like I'm walking into a TJ Maxx and I'm paying Macy's or Dick's prices. That's how I feel. Nike, very expensive products in there. They got good products. And then at the back of the store, they'll have occasional like toy section. They got kids section. They got some kids toys, but they're struggling to find out where they fit. And I tell you myself, you know, I love going into Target. Every store has a certain appeal. I don't know what the appeal is for Kohl's. They're stuck in the middle. Are they a discounter? Are they a premium brand? Are you going to find top-notch goods at quality prices there? I don't know. They're just a store that has stuff. That's my opinion. I'd love some feedback for Kohl's. What is the purpose? Who goes to Kohl's for what? Are there certain clothing there? I love Nikes they have there, but it is an expensive store when you're walking into Kohl's paying Nike prices that you're paying at premium outlets. Kohl's down 15%. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets chopping around, and how about Verizon? Down by 6.7%. And yeah, missing on their outlook. Consumer churn increase in the first quarter is what they're talking about there. Growth in Q1 is probably going to be soft. And yeah, Verizon, this thing's been struggling. Quite an acceleration from the lows of 2023 up to the recent highs. But look where we are. You're right back where we were in January of 2022, which is right back where you were in January of 2023 in Verizon. And that's going to be a critical area, right? This high, 42.58 from January 1st, the first week of 2023. And we just traded within almost pennies there. And yeah, we're talking about Kohl's everywhere, man. Down by 15.7. And, you know, surmising it is. It's one of those things that it has that feeling. And I think it's because of the absurd impulse item array in some of these stores, right? We're all familiar with it with Marshalls or something like that, right? And it's genius. When they put you in lines, why put you in a big line if they didn't make you stand next to impulse items of a variety? But that's usually done at discounters, right? There's all these things that you really don't need, but maybe they're just cheap enough right next to you. We say, yeah, I'll buy those. I didn't come here for that. There's no way I would have come to the store for that, but I'll buy it. That's not how high-end retailers work. And you're paying high-end retail prices at Kohl's. So even that whole checkout experience, then you go one level deeper, right? Yeah, and they don't do that at high-end places, man. Okay, and that's the weird part, is that stuff makes sense when you walk into a Marshalls, when you walk into a Bell's outlet, right? They're everywhere. It makes sense. But at Kohl's, the prices there, it doesn't make sense. Now, add one thing further. When you want to return something to Kohl's, okay, you got to go to the special customer service desk where they accept returns for Amazon, I believe. I've tried to do it once, and it's insane. Sometimes there's like 7 people sitting there. They're doing Amazon returns at Kohl's, and you got to wait in line. Seems like they're nickel and diming everywhere. And meanwhile, you want to buy a shirt, it's a Nike shirt for like $35. I'm exaggerating to a degree, but that's their problem, man. I see it myself as a consumer. I'll shop at Target. I'll shop at Walmart. I love Dick's Sporting Goods, okay? I love Macy's. You got to have a place, and their place is lost right now, and the chart is saying it. Michael's, right? Tick-tacky a little bit to that degree, but that's not the ideal consumer experience. Okay, that's not what you're paying premium prices for. They don't do that at Dick's Sporting Goods, right? Dick's Sporting Goods is a spectacle of equipment, sporting goods, top-end gear. Their stores are like warehouses. They're anchor stores in malls, etc. Okay, Kohl's considers themselves an anchor store, I'm sure. I'm not going there. That's not anchoring me. I go to the mall. I avoid Kohl's. Nonetheless, yeah, pay attention. Kohl's down 18% right now. You talk about it, man. It's not stopping. Yeah, pushing the lows, $9.90 on Kohl's. We jump around to some of the other retailers. Walmart, quite a slide yesterday. Catch a little bit of a reprieve today, up by 0.6%. Target shares down by 0.2. Speaking of Marshalls, TJX down by about 1%. We take a little bit of a bigger picture. All right, so if you're watching TJX, man, look at this. I put this there. You're approaching the bottom part. All right, I'm going to put this on my radar. Yeah, this is a great company. Well-defined channel line going back, more than 2 years. Okay, big picture, you're bumping up against it. Maybe you give it a little bit more room. You could always scale in. Just looking at the volume. Yeah, a little bit of a volume. We had volume the week of February 24th, and we did have volume on that pullback, though, last week, of course, with the market. But TJX, check out that channel line. Well-defined, going back to the lows of $53 in 2022. Yeah, I like that chart. You want to see a couple other great channel lines? Check this out. So if you're looking for great channels on a longer-term basis, right? TJX, McDonald's, okay? Check out that one. This one goes back even further. How about that monthly on McDonald's going back to 2015? How's a 10-year channel to the upside from Mickey D's, taking you from $95 to $313? This month, you got highs at $326. Now, we're right in the middle of that channel, but boy, you talk about momentum to the upside. So that's McDonald's. And then Procter & Gamble. This is always the other one that jumps out at me. You're talking about lows of 2018. We make a low of about $70. You start that trend basically from right there, right? You could even extend it. Almost matches up. Pretty well defined. That one to the left, look at these channels, right? It's what you like to see. You're right in the middle of it, but great companies. Procter & Gamble, McDonald's, TJX, all of them. Longer term, great channels to the upside. All right, we got NASDAQ 100 up by about 80 points right now. And, oh, look at this, Amazon. How about it? Whew, there you go. Yeah, as I mentioned. So they got some type of upgrade this morning. There's a bid for you. Whew, from 194 to 199. What's going on Amazon? Yeah, some of the numbers yesterday in terms of just the Magnificent Seven, over $750 billion in market cap alone. I think the NASDAQ 100 lost $1.1 trillion. Look at this Amazon run, man. Amazon up by 2.3% right now. We jump around to Microsoft up by 0.3%. NVIDIA shares. There you go. There's a bounce. 3.3% right now. Meta shares with a bid by 2.2%. Tesla with some volatility to the upside finally for those shareholders. Up by 5.3% for Tesla. Jumping around to the banks, you talk about some pullbacks for banks. Today, a slight reprieve. JP Morgan up by 0.3% right now. Bank of America up by 1% right now. Citi up by almost a percentage. Wells Fargo barely in the green. Yeah, so there's your Dow. Okay, the two components powering the Dow, Amazon and NVIDIA. Verizon, and this is where it's so bonkers, price-weighted index. Verizon doesn't matter, folks, because it's down 7%, but it's only a $43 stock versus you have an equity like Amazon at 198. You have an equity like Amazon at 100. Excuse me, NVIDIA at 100. Excuse me, that's in the Dow. Yes, in the Dow. You jump over the NASDAQ. Yeah, NASDAQ 100 leading the way right now. You get the NASDAQ 100 up 123. Broadcom up 2.5%. AppLovin, this thing's been volatile, right? Up by 7.3. Yeah, somebody was talking about mirror images between MicroStrategy. And look at this, man. You know, you want to trade crypto, trade some crypto, man. That would be my advice. Don't trade MicroStrategy. You can trade a Bitcoin ETF. There's a lot of ways to trade crypto outside of the leverage vehicle they have going on. As you said, yeah, who's trading kidneys for crypto at 100 grand, man? I hope not. I mean, you laugh, but you know that things are just stratospheric with everything going on right now. Yeah, what's remarkable is I wonder what the split is of where people return their Amazon goods. I can tell you myself, I drop it off at a UPS store right around the corner. Seems way easier than dropping it off at a Kohl's. So I wonder how that breakdown goes. I don't think Amazon has any reason to buy them, man. There's no reason. Why are you going to buy? I mean, check this out, right? Kohl's. $1.1 billion. I don't see him buying Kohl's for $1 billion. I don't think the brand is even worth anything right now. All right, folks, markets in the green, Dow off in the red at 144, S&P's up by 8. One more segment. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's rolling to negative territory. We're off by 9. The volatility continues in this market, man. Look at that volatility, right? We come in 8 o'clock, 56.50. You trade down 50 points. You trade up 30. We're down 20. These are 5-minute bars. They don't seem as drastic because this chart on the S&P, just going back to 9 o'clock last night, is 100 points wide, right? 100 down, 50 up, 30 down, 30 up, just volatility everywhere in this market, to say the least. We jump over to Tesla shares. Up by 4.5%. So Donald Trump, he's going to be buying a Tesla. Folks, Trump can't save Tesla, okay? The animal spirits are out of this market, at least for right now. And when you have the president calling it an illegal boycott, folks, this is the stuff that drives people crazy about Trump. We're not even going to get caught up on it. It's obviously not illegal if nobody wants to buy Elon's cars and they don't agree with him, okay? It's not illegally. It's not collusive. They're allowed to not buy products from a private citizen that's jumping into government, okay? And that's not going to be. If there's anything that's an indication, that's not going to be it. You can't legislate that people have to buy the products of private businesses. You better get your spikes up about what's going on with Tesla, man. All right, we're at 232, and you are still a company that is valued at $750 billion, okay? And they have shrinking car sales. Take the politics out of it, man. They got a CEO that's been working remotely for 5-6 months, and it's dicey when you start seeing the president saying it's illegal that people aren't buying the cars. I mean, you jump over to DJT. I was looking at this yesterday since it was making headlines, making new lows with the market. You know when the best time was to sell DJT? The moment the equity opened the day after the election, November 6th, when it was at $45, you're at $19. So be careful for Tesla, man. I didn't think that it would have given back all the gains from October. And so it can go further, faster than you expect, just like this market, man. And we finish it up with Amazon. Big numbers, up by 2.5%, even as the NASDAQ rolls over a bit. Folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge. Fast Market. Larry Pesavento, Jacob Shoup this afternoon. Folks, have a great Tuesday. We'll see you tomorrow morning. Thanks so much, everybody.